Welcome to Dad's DeFi Space. I'm Kevin. Please like and subscribe. You are on a Saturday live stream. We haven't done one of these in quite a while. Today, we're going to take a look at what happened to Bitcoin and the crypto markets. There was a huge crash. I'm going to get deeper into my DeFi portfolio review. Hopefully, you'll check out the video. I'll add it into the description later. And later in the stream, I'm going to show you how to do a snuggle rebalance so you don't suffer so much impermanent loss with your liquidity or yield farming positions. Something that I learned from the UIG group, which we'll talk more about later. So please like and subscribe and ping that notification bell and support the channel by checking out our links below. Yes, they are affiliate links, but you can support the channel if you so choose to do so. We're going to get started by looking at the Crypto Fear and Greed Index. Yesterday we were at a 22, and today we're sitting at 23, which is basically about the same it has been the entire time. These are the times in the market where we should be running into the burning building, buying our high conviction plays, hand over fist. Now, for me, that would be Bitcoin, and that would be a little bit of ETH, a lot of Solana, AVAX, a little bit of Ton Network, and a little bit of NEAR. Those are my larger cap, higher conviction plays as far as I'm concerned that I feel much more comfortable with in these markets. These are the times when no one is here in the crypto markets. No one here in the crypto markets is usually the time when we should be positioning ourselves into our large cap positions. If you haven't realized, most of your mid and smaller cap altcoins are bleeding terribly, and this is not the environment to put our money into assets that are much more risky. Many of my meme coins that I've cut down my positions on, many of my lower cap plays, minus a few that we'll talk about later, are let's just say I should have unloaded my bags earlier. So what do we do now? Well, at this point in the market, it's not going to be too much longer till we hit our last leg of the bull run. And we don't want to be left behind when that train leaves the station. So, not financial advice. Anything you see here is for education and entertainment purposes only. Disclaimers in the description. But these are the times that not only are we going to put more money into our high conviction plays, we're going to put more money into our more, not stable, but large cap plays as far as liquidity positions. So before we get into today's details, I'd like to look at why the crypto market may have been a bloodbath the last few days. Let's just be honest. The crypto markets have been a bloodbath, and liquidations over the last couple of days have totaled $150 million. Bitcoin fell 2.5K in just minutes, and Bitcoin went to a monthly low of almost $54,000. These are times in the market where we really need to deleverage our positioning. Now, I would be the first to say that I don't have some positions that I'm taking loans out on Aave, but they are very conservative positions, Bitcoin, and I always keep my loan value ratio um, below 60%, and I try to keep it closer to 50%. So, um, let's take a look at this article real quick. Okay. There has been $150 million of Bitcoin liquidations. And this just goes to show you shouldn't be playing with leverage. Leverage wrecks a lot of investors in this market. I'm not saying I've never played with leverage, but if you're going to, not financial advice, never, never play over 5x leverage tops. Really, 2 or 3 is plenty. Those swings in these markets are too great that a huge liquidation wick could easily take out your position. I've had this happen to me before on the Solana network with the Jupiter perpetual exchange, but only when I've been playing around with small amounts of money. Be careful out there in the market. Now, the next thing I wanted to look at during our stream is Bitcoin open interest. Now, open interest is the amount of options and derivative activity on Bitcoin. These are perpetuals, option contracts. We were really high, honestly, up in the $3 billion mark not too long ago. But after these last few liquidations, we have dropped a little bit below the well, I was specifically talking about futures. Futures were around 3 billion, perpetuals 184 billion, but now we're sitting a little tiny bit lower than that. Now, the issue is when the market is going down and open interest is going up, that's bearish. When the market is going up and open interest is going up, that would be bullish. And right now, open interest is, let's look at this on a lower level, like a month. If you look at open interest on this chart, we've gone down a little bit, but we've pretty much been range bound, between here and here. Now, I'd love to see us wick down where we were. Maybe, let's see, 122 billion in perpetuals, maybe as low as 157. And right now, we're still right around 182, so get in there. When this number goes down and price starts going up, it's time to load the boat. At least in my book, it is. Now, that's enough talking about the markets. Let's take a quick look at Bitcoin on the TradingView chart. Taking a quick look at that, we can see we are right on our bull market support band around 5,400. We had a huge dip over the last week. I have been buying a little bit of stocks in my retirement accounts. Yes, I do diversify a little bit. That is important. But Bitcoin is still seen as a risk-on asset. Bitcoin being a risk-on asset means it follows the stock market at times, and lately we have been following the stock market, dipping down with it. But if you look back from the beginning of August up until this dip happened, we weren't really following the S&P 500. So we are now going to take a look at the Bitcoin chart. You can still see that we're within our support and resistance zone between 51,027 and also 61,000 and say 600. We are not going to be bullish again until we get back above this 61,500 level, which would carry us basically back into the bull market support band. When we have a couple strong daily candles above this bull market support band and our resistance level 61,600, then it's on, baby. And that is when we need to make sure we are positioned for the takeoff. Now, understand this doesn't mean that Bitcoin and the crypto market is just going to go straight up. That's not going to happen. But right now, the market still is pretty bearish. Now, let's take a look at the total three. I don't want to really look at any other charts today, at least right now. But this just kind of sums up the altcoin market. We could actually look at the total two, which also puts Ethereum with all the altcoins. And you can see we are still range bound between 753 billion and 1.2 trillion dollars. That was the high that we reached back in March during the spring. What that tells us is as long as we don't break this, say, $700 billion level, I feel comfortable in the majority of my altcoin positions, and you should too. So as long as we're between 753 billion and 1.2 trillion dollars with the total market cap of the crypto market, the total two market cap, then we are comfortable in our positions. Again, not financial advice. These are predictions, not I can tell the future of what's going to happen. So now what I wanted to do is just take a quick look at the total market. We're just going to go to the top 100 coins today, and we can see on the week Bitcoin down 8%, ETH down 9%, BNB 7.3, and I am running a BNB liquidity pool right now, which went way out of range not too long ago, along with the ETH pool too. We'll talk about that in a minute. Toncoin, with all the bad news, down 15%. Avalanche, not as bad at almost 4%. And I will catch you all next time. Peace. As you continue your crypto journey, please support the channel by visiting the links below. $15 off TradingView, 10% off Coin Ledger and Tangent Wallet, or 20% off your first month at Crypto Labs Research UIG program.